Hi guys, and welcome to this week's edition of our forecast, where we're going to look at what's coming up in the week. Are there going to be opportunities for us to look at? So if you remember correctly, I spoke about a redistribution, or rather a take profit phase on the dollar index. Now, my focus on dollar index hasn't changed. I'm still bearish, right? But as you have noted, for the past 3 weeks, right? Not the past 2 weeks, I would say last week and the previous week. We just started another week right now. You can see that dollar has redistributed, right? What do I mean by dollar redistributing? So when market is bearish, you look for redistribution as a take profit phase. When market is bullish, you look for reaccumulation as a take profit phase. So I did mention, I think 3 weeks back, I think it's the last weekly focus that I did, that was 2 weeks back, where I said we could see dollar move to the upside before another move lower. Now remember, our yearly target for dollar index, we are looking at 99.50. that's our yearly target. My yearly target, let me put it that way, because we all have our own different perspective. But since you're in the mentorship group, you already know how we came about with that bias. So we have seen a very aggressive redistribution, right? And price right now is in premium, right? We've already traded above a key price point where I was expecting dollar to find some resistance, and that's the 102.16, right? I was expecting dollar to find a bit of resistance and push to the downside, but that did not happen, and we've closed above. But if we are to go to a daily chart, right, you can see where price was reaching out for. It was reaching for fair value inside the daily bearish order block, right? So on the weekly, you can clearly see we closed above 102, but we are basically reaching for liquidity on the next lower time frame, which is the daily time frame, and price was reaching into a daily bearish order block. So today we've already seen price finding a bit of resistance inside that level. You can see there we've got a huge consolidation that's on the H4 time frame, and this is our daily bearish order block. And if we go on the H4, you can see we've got a huge consolidation. The lower you go, then you can see there, and this is our consolidation, right? So this move happened last week, Friday, October. That's NFP, right? NFP came out positive, unemployment rate came down, so that gives a boost to the dollar, right? So with that said, I'm still not changing my my focus on there's no evidence whatsoever for me to say no, dollar is gonna keep pushing to the upside. Right now my focus is mainly on understanding. My focus is mainly on understanding where and when does dollar really find sellers. At which area is dollar going to find sellers? That's the thing that I have to focus on at this moment in time. Now that now translates to us to the calendar. We have to look at the calendar, and we also have to keep in touch with what FOMC members will be talking about, right? Because these are the guys that are going to give us a guidance on how we should interpret the US economy, how we should interpret the dollar index, right? But as of now, I think the redistribution phase, when price is moving back into premium before another push to the downside, might be extended in the short term. But when we have fundamentals like the Atlanta Fed GDP, you see, when we have fundamentals like that, and when we have people like Bostic speaking, then we need to hear what they say. We need to understand what they say. What does it mean in relation to where dollar is going to trade to? So looking at this week, we've got I think the most important one is on Wednesday, where we have FOMC meeting minutes, right? These are just meeting minutes. They are not your usual rate decision. And then Thursday we've got CPI, right? That's the next important fundamental. And then up until Friday, where we get the PPI, right? These are the most three important fundamentals for dollar this week. And we could see now sellers coming back into the picture, depending on what those Fed minutes would have given us, on how CPI would have given us. If we look at, say, CPI on Thursday, right now year on year is looking at we're looking at 2.3 as the forecast. Let's see, the forecast, we're looking at 2.3, meaning they're anticipating inflation to go lower. The chances are very high. So with that in case, if that is the case, that we get a lower CPI print, meaning inflation is coming down, then the chances of another 50 basis point hike on the next meeting sometime in November, I think they'll be so slim, right? Because the Fed will be getting what they set out to achieve, bringing down inflation to the 2% threshold. So with that in mind, if we do get, say, a higher CPI print, maybe a 2.4, 2.5 unchanged, then we could literally see dollar move lower, you see. So that's how you have to approach the week now, understanding what the upcoming fundamentals could likely affect the dollar index. Now, as you can see, we already have a fair value gap from current week to previous 2 weeks high. We've got a fair value gap there. That's your internal range liquidity. So price will look to rebalance that that range by moving lower. So we've got internal range liquidity right above this high and the current week's low, right? So we've got a fair value gap, right? So when we go to the daily time frame now, you can see we've had 1, 2, 3, 4, 5, 6 consecutive days of an uptrend. Chances are very high that we are going to get a bit of sellers coming into the market, and that's when you have to seize your opportunity, right? That's when you have to seize the opportunity. When you go to H4, this is going to be where you see you see there's the imbalance. See this imbalance here. Chances are very high that we could move lower to fill up this whole section of price point during this week. But for this to happen, yeah, pretty sure we need to have maybe a higher print on CPI. We need to have a higher print on CPI, or the minutes that we are getting on Wednesday 8 p.m. We need to have the same forecast that Powell gave us 3 weeks back during FOMC when he was dovish on dollar index, right? So I'm still bearish on US dollar index, and it's a case of you now understanding where is your premium area. Already I've given you the daily premium area. Now this area here, this daily premium area, is going to provide you huge opportunities, especially on pairs like euro, right? Euro, pound, NZD, USD, AUD, USD, you see? Because when dollar reaches for those levels, you can see here Aussie dollar is inside premium, which is an H4 bullish order block. If you go to NZD USD, you can see the price is trading right almost at the old low. If you come to pound USD, let me go to the daily. If you come to pound USD, you can see the pound USD is trading inside our daily bullish order block. So the chances of a move to the upside to fill up this imbalance here, chances will be very high. If we go to a weekly chart, right, you can see the fair value that I'm talking about. Now, if we anticipate dollar to move lower, pairs like pound USD and sorry about that, and euro USD, you know, those majors, they are going to move to the upside, you see. So you'll be expecting price to move higher from discount, right? Right now, if you see on daily, we've got our daily bullish order block. That's your discount array where you should anticipate price to move to the upside. Now, if you go to the calendar, I think tomorrow morning, if we go to the calendar, tomorrow morning, what do we have? We've got ECB, that's for euro. Yeah, it can really move also the pound, but not by much these days. And then, yeah, the calendar, this is Wednesday. We're talking of Tuesday. Retail sales, BRC retail sales. There should be some news in the morning. There isn't much news for pound tomorrow, so expect probably the consolidation to continue on H4, but expansions to the upside are your ideal trade setups. Expecting price to move to the upside, targeting what is previous old high, or to fill up this imbalance right here. Same applies with euro. You're anticipating it to move to the upside to fill up this imbalance here, because you can already see we are inside this range here. Let me go to the monthly. I think you see we are inside this monthly fair value gap. We've almost filled it, you see. So chances of a move back to the upside, they are quite high. So we are literally in a higher time frame discount on H4. This is an area where you anticipate price to move lower. So this daily candle that I have here follows through with the current price action, say on H1. You can see that this is a representation of the daily candle. So if this candle turns bearish while we are in discount, chances of a move to the upside before that candle closes for the day will be very high. So I'll be only looking for price to be in discount on those lower time frames for me to buy euro USD. Let's say if I go to 30-minute time frame, we really don't have much in terms of defined arrays. Let's see if I go to pound USD 30 minutes. Yeah, we've got this bullish order block here. So this is for scalps. This is your bullish order blocks. So if this candle turns, you see it's already bearish, yet we are in discount. So the chances of a move to the upside will be very high. You see, chances of a move to the upside will be very high. Coming to the other pairs like USD CAD, we'll be looking for a move lower, right? We're looking for a move to the downside. As you can see here, our premium, if dollar is bearish, we look for price to go lower on pairs that I've got USD as the base currency. So for USD CAD, looking for price to reach out into this premium array before a move lower, right? This is a weekly chart. If we go to the daily, you can see this gap here. So we've got internal range liquidity of buy stops above this old high here. Once we trade above that and fill up this gap, look for confluence from things like fundamentals or price action from other currency pairs or from Brent crude oil, right? Because it does support CAD. You can see the move that we have had on USD CAD right now. Same applies on Brent. You need to be in a position to hunt for those type of confluences for you to give more emphasis to your shorting position. You just don't short, because we've got another array right here, this daily bearish order block. Price could actually reach for that before it moves lower. So for tomorrow, which is Tuesday and Wednesday, expect the high of the week before price move lower. Same applies with USD CHF. Naomi has asked for this one here. USD CHF, we are inside our daily fair value gap, right, which is a premium area. We are inside a level where we should anticipate price to move lower, and you can see since market open, it just traded to the upside and then it pushed lower. If we go to the weekly chart, right, this is the weekly chart, we almost filled this gap. We didn't touch the fair value gap high, right, we didn't touch. So inside this range, you are hunting for shorting opportunities because you're expecting price to move lower. You can see this. Can you see this price action here? Okay, let me just do this. See this price action. You see this candle. This is NFP, right? We've got a similar candle on dollar index like this, but look how USD CHF has already moved lower than dollar index, which is still high here. You see, dollar index is still up here, yet USD CHF has already almost filled the imbalance that was created, the liquidity void that was created by NFP. You see, USD CHF has almost erased those gains from NFP. If we look, say, on USD JPY, you see, price is still up here. The liquidity void left behind by NFP and unemployment rate, those two were the most contributing factor to this move to the upside. You can see here USD JPY hasn't moved lower, but if you come to a higher time frame, right, let's go to the monthly first. This is a higher time frame with the fair value gap here between the high of September and the low of July, and price is filling up that imbalance. Almost, I think it's almost filled up. It's already above the equilibrium point of the gap, right? It's above the equilibrium point of the fair value gap, so chances are very high that we're going to see price move lower. And when you go to a weekly chart, you can see here this gap here, current low, and the week of September 23 high. There's imbalance there. This candle here, chances are very high it's going to close bearish on USD JPY. The only time that it will close bullish is if we do get supporting fundamentals from the FOMC minutes, CPI print, PPI print on Friday. If we do get those fundamentals favoring dollar index to the upside, then USD JPY is going to keep moving higher and higher, probably testing the 151, 152 price points, right? So I'm still bearish on UJ. I am bearish on USD CHF, targeting these old lows here of this range here. And then there's another pair that was asked for. I haven't looked at this pair in a while, so we're talking of Euro GBP, right? Euro GBP, last time I did this pair we were way down here, right? So looking at Euro GBP in terms of rate differentials, these pairs are almost they're almost the same, right, in terms of interest rates differentials. You can see there we've got Bank of England with 5% and we've got ECB with 3.5. so that's low versus high. Low versus high when dollar is bearish. What do you do? Low versus high when dollar is bearish, right? So you're expecting pound to gain strength against the euro. Low rate country versus high rate country when dollar is bearish. You expect euro to gain. Let me just confirm that quickly. So if US dollar is bearish, you buy the strongest versus the weakest. So right now our rate differential here does not apply to Euro GBP. So the only rate differential that you can use here is low versus high, right? A low rate country versus a high rate country. So with our rate differentials on this asset here, it's really not going to apply for you to use institutional pairing in dollar-based strength or weakness. Right now dollar is bearish, though we have had a bit of a bullish move, right? We have had a bit of a bullish move to the upside the past week, right? So if dollar is bearish, you need to buy the strongest versus the weakest. Right now, when we look at our rate differentials between euro and pound, is 3.65 versus 5.0, right? So with this, you expect euro to lose value against the pound, meaning looking for selling opportunities. But when you go to the chart, you can clearly see from a higher time frame point of view, price is approaching some really oversold conditions. Market is really oversold on euro GBP. So I would lean for bullish moves on this asset here, based on where the technical chart is at this moment in time, right? So on a positive pound release, right? On a positive pound release or a negative euro release, I'll be looking to buy euro GBP. You can see we've just lifted off from a higher time frame discount array, which is our weekly bullish order block. We ran stops from the previous old low, ran stops, and then price is pushing to the upside. So I'll be expecting price to reach for these old highs here on euro GBP. So I'll be leaning more towards buying euro against the pound. You can see today market jumped and then closed that gap, and then it moved to the upside. If we go onto the daily chart, right, see, this is Friday. A strong dollar, you see, a strong dollar at a time when euro has got less rates than pound. We saw a big move to the upside, only reaching out into a daily bearish order block, and then price moved lower. So you can see here, when we see price approaching say 0.83389, right, expect euro GBP to find resistance for price to push to the upside. If we go on to the H4, see this gap here, this imbalance right here, price would definitely find support inside this range before it moves to the upside, targeting this old high from Friday, right? So I don't usually trade cross pairs, but in the case of this asset here, euro GBP, I'll be leaning more towards looking for bullish trades, for long trades on euro GBP. Now I hope I have helped you a bit there, but if you have further questions, you can just send them on the group, right? So that's pretty much about what I wanted to share with you guys, so that you have a bit of a guideline going into the week. And if you have any questions, right, if you have any questions or any setup that you have and you are not so sure, or you need some clarification, you can just send me a message on the Telegram group chat, and then I can attend to that. We also have, just in a nutshell, Brent. I did share this one, I think, also 2 weeks ago, when I was like, Brent is testing support. We were still right towards the $70 mark per barrel, and I did say to Mkarati that take note, because I know he's the one who trades Brent. Take note, Brent is about to find some huge support, and you can see how it has moved to the upside. As for the precious metal, I'm pretty not sure where we are heading next, but chances are very high we are going towards the 2,800 price point on the precious metal. So yeah, that's pretty much about it for today, folks. That's pretty much about it for today. Expecting dollar to move lower during the course of the week, but if we do get some favorable fundamentals from the minutes, from CPI and from PPI, then expect the uptrend that was confirmed on Friday to continue. So keep an eye on those three fundamentals that I've mentioned. They are going to help us to make informed decision this week. So yeah, that's pretty much about it. And for those who are not in the mentorship group and you'd like to join the group, just send me a message. And if you haven't subscribed to the channel, guys, make sure you click the subscribe button and make sure your notifications are on, so that whenever I upload a recording, you get notifications and you get to watch, and we move accordingly. So with that in mind, I wish you guys good luck and happy trading. Thank you, folks.